This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Today I am in hot and sweaty and humid Virginia. So I own some property here in Virginia, just got back from Vancouver, gave a real fun presentation to a very large group there, and good stuff. So a little more traveling here in about a week, but had something interesting today that I wanted to pass along. And it's a clip from Cole Wilcox. And Cole is in one of the chapters of my little book of trading. And his firm, Longboard, is in my book. And I wanted to pass this clip along. So first thing I'm going to do, this is an interview that he did with Bloomberg. And I'm going to play two clips. And then I'm going to talk about both of them. So the first one's about 2 minutes. And the second clip is about 40 seconds. So let me go ahead and cue up this first clip.
I'm wondering if you could give us an example, maybe even a model portfolio. How would you put something together?
In the case, our strategy is actually designed to be totally diversified across, so we're not interested in individual predictions of one way or the other.
I understand that, but I mean, can you tell me what, let's say if someone came to you today or this month, how would you be allocating the capital?
Yeah, so right now our portfolio is distributed since we're long bonds, long the grains, so a big portion of our trading profits this month have come from the entire grain complex, soybeans, corn, et cetera, as well as being short energy, short the euro, because these are sort of established trends that are in place right now.
When did you get into those trends? When you started seeing, for example, with the grains, when you started seeing what's happening with the drought?
No, in our case, so what we do is we look at the closing prices of all of these markets over a look-back period of about 1 year. And if you're in the upper decile or today's price is in the top decile performer or bottom decile performer, we'll be long or short those markets. If something is just in the average over the last year and a half, we will have nothing to do with them and be completely flat.
And this is a strategy that's based just on price trends?
It's just based on price trends because the way that we see things is that in the end of the day, whether or not something went up or down is what shows up on your statement and determines profitability. Other things are kind of just a narration and a story.
So how do you break out the idea of momentum if you're just looking at price? Because it doesn't matter why a particular asset would go up or down. The only thing that matters to you is that it does move and that the change is recorded. But all that is a reflection of what other investors are doing with their money.
That's a true statement. I mean, all markets are a reflection of supply-demand. But in the end, really what shows up on your statement as far as things going up or down is what dictates profitability. Whether or not you won or lost the zero-sum game of markets is whether or not prices went up or prices went down and you were in the correct direction of that particular trend.
So you look at 100 different global markets, including stock indices. Taking a look at that, where are you seeing the momentum moves right now? Just parsing it out a little bit deeper.
So we're mildly long some of the U.S. equity markets and mildly short some of the European markets, but no aggressive positions one way or the other.
When you lay on these trades, how do you know when to get out?
So in our case, we have a fundamental understanding that most things are average and only a minority are persistent outperformers or underperformers. So we want to not have anything to do with things that are just average. So if today's price over the last relative to over the last year is just in the average, or today's price is in the median or the average, we will have no position. So if you go from being above average or below average to just average, we will exit those positions and be neutral.
But I just want to follow up. Is there a specific amount of money that you would make in a trade, and then you would say, "All right, I've doubled my money. I'm going to get out"? Because how would you anticipate the sell-off if you were long, or the price reversal if you were short, if you're not necessarily taking a bet on direction?
Well, in our case, we do take directional bets, but we don't have a predictive edge. So we look at things as saying they're more like a coin flip. We lose money on half the trades, we make money on the other half. People always ask, how can you make money if you don't have a predictive edge? The answer is because of the payoff structure. We maybe lose $1 on the losers, but on average we gain 3 or 4 on the winners. So it's the magnitude of the winners versus the losers is where the edge comes from.
I have a follow from a listener from the momentum question earlier saying if it's based on price trend, how is that not momentum investing?
So the way that I define momentum investing is the way that you see various academic type studies that are fairly arbitrary types of hold times, 3-month things that were up the most, hold them for 3 months and then sell them, et cetera. Ours is much more of a dynamic case-by-case basis where we see that we're trying to harvest the actual root cause of why momentum studies in the academic world seem to work as opposed to focusing on the symptoms.
You mentioned harvesting. I'm wondering, what's the turnover? I mean, because this seems to be very sensitive. If you're looking at 100 different global markets, you could be in and out on a regular basis.
So the reason that our company's name is called Longboard is that we are actually seeking to capture these big wave distributions. A longboard is a surfboard for a different type of wave, a very large wave. Our average duration on a position, both long and short, tends to exceed 1 year. Our profitable positions are in excess of 1.5 years. So we are really seeking to capture multi-year cyclical trends on the long side and the short side that appear routinely in global financial markets.
You know, I love to listen to these fundamental stock jockeys talk to somebody who's a trend-following trader. Right. I give Cole credit. Come on. He's fighting the good fight. He's in there trying to get these folks to understand. And of course, they're so arrogant too. I mean, what's the one guy say? I understand that. He clearly doesn't understand anything. The next gal, she goes ahead and she asks if Cole's taken his positions on the drought reports. Clearly, it's an uphill climb. It's an uphill climb. And, he's doing yeoman's work in there to go ahead and try and get the points across. I want to let it go. And notice it's what's going on. Give us the calls. Give us the predictions. Even though Cole is going ahead and saying loud and clear, we don't do that. This is what we do. They still don't hear it. They still want to know what's happening right now with a market. Let me play one more short clip that kind of buttresses that view.
You talked about the stock indices before. What are you seeing with fixed income?
On the fixed income side, we continue to see being, long the bonds, essentially a deflationary type environment, and that has persisted for a trade that we've been in for an extended period of time, and see really no end to that particular trade anytime in the near future.
Energy. Tell me about what's going on in the energy complex.
So we're currently short most of the energy complex, everything from natural gas to gasoline, gas oil, crude oil, et cetera. It's not a trade for us that has particularly been profitable in the near future. It's we had been long, we went flat, we're now short, but it's not something that is particularly producing any profits as the markets aren't really moving substantially one way or the other currently.
I just love that. Tell us about the energy. They just want a story. They can't live without a story. If they don't have a story, they don't have a business. That's the bottom line. It's freaking dog and pony show. It's made up. It's nonsense. Cole's on there saying, look, we're trying to capture the price trends. The only thing that matters is profitability. We want to capture the trend. That's it. And they keep saying, where do you see energy going? Where do you see fixed income going? Where do you see stock indices going? You would think after a 15 or 20 minute conversation, they would get the idea that Cole doesn't know where they are going. He doesn't know. But it doesn't stop the Bloomberg folks from thinking that there is a way to figure it out. Let me talk a little bit about my Vancouver speech that I gave last week. And, I'm sure I caused some people to kind of be like, oh man, where's this guy coming from? And, one of the slides that I used is a slide from Paul Tudor Jones. And the title of the slide is called Fundamentals Are Religion. And the quote that I use from Jones is, quote, the illusion has been created that there is an explanation for everything with the primary task to find that explanation, end quote. That was exactly what the Bloomberg reporters were doing to Cole Wilcox. Give us an explanation. Explain the narrative. Whereas Cole is saying something quite different. He's saying, look, our firm has figured out a way to put all that nonsense aside. And I don't think Cole used the word nonsense. I'm using it. He is saying, let's put it aside and let's concentrate what's on really important, which is profitability, not stories, not narrative, et cetera, et cetera. So I think that slide that I just read from Paul Tudor Jones is just great. And, one of the things I talked about in Vancouver was that famous Bruce Lee quote, be like water. I mean, that's the way you have to be. You have to be like water. You have to go ahead and empty your mind, be formless, shapeless like water. If you put water into a cup, it becomes the cup. You put water into a bottle and it becomes the bottle. You put it into a teapot, it becomes the teapot. Now water can flow or it can crash. Be water, my friend, end quote. I mean, that's Bruce Lee. That's just a friend. I mean, you're saying to yourself, yes, Covel, what does Bruce Lee have to do with trend following? Really? Really? Empty your mind, be formless? The Bloomberg reporters were not emptying their mind and being formless to listen. They've got an educator in front of them who's trying to explain a price trend following strategy. And all they can do is say, where's it going? Where's it going? Tell us about energy. Ooh, tell us about energy. Tell us about energy. It's kind of creepy. Now, you might say I'm creepy. I don't really care. But everything flows, right? I mean, that's the ticket. Everything flows. And the momentum drives a stake through the primary tenet of modern financial theory, efficient markets, the efficient market hypothesis. Trend following momentum puts a stake through it. For all you vampire fans out there, for all these, there's apparently a show on TV every day about a vampire. But trend following is that stake. It's that figurative stake. I mean, look, the market's trying to go from A to B. That's it. It's trying to go from A to B. There's a lack of balance between supply and demand. We don't know why. We don't know how. We can never know exactly how or why. But how do you reduce your decision-making to something that's easy, something that's digestible? Once again, this is what Cole was talking about, price. Reduce it to price. In Vancouver, I put up a chart that Sunrise Capital let me use of all the various implosion type events in the last 15 years. The dot-com bubble, the long-term capital management, the fall of 2008. And invariably, you see the meltdown. You see the meltdown if you're a buy and hold S&P guy. I mean, I didn't hear that conversation in Cole's interview with Bloomberg. But, obviously they were fixated on what they wanted to fixate on. But what they should have said is, hey, Cole, why does your strategy benefit when the world goes to hell in a handbasket? Why does trend following benefit when everybody else is jumping off a cliff? Why does it make money? I mean, that's the intelligent question. Now, let's just side note here for a second. They can't really ask that question because if they ask that question, if they start to go down that line of questioning, what do? They open up Pandora's box. Pandora's box being they start to question the very act of what they're doing for a job, the reason they get paid. So, like every other interview I've ever seen with a trend following trader, and CNBC famously has done this to David Harding like 4 times, they try and make it look like we've let the example trend follower on today. We've filled the budget, and we let the odd guy come on, the alternative guy, and we've got to shove him off now and get back to our regularly scheduled bullshit programming that we just know we can fool you with. So off with Cole, off with David Harding, and it's back to bullshit. Actually, I'm really not angry today. I promise you. I'm just commenting here, and it's kind of humid and sweaty in Virginia. But, think about it, though. This illusion that we think we can control things. It's an illusion. You can't control. I mean, the folks in Bloomberg that were asking Cole questions, they actually think that Cole or somebody else that they know can control something. You can't. You don't know what's going to happen. But it's okay. It's okay to say, I don't know. I don't know what's going to happen. And you build a strategy around that. You build a strategy around not knowing the outcome. You build a strategy around having a good trend following investing process, a process that puts you in a position to where you're tracking a diversified portfolio of markets. You have your entries in place. They could be very simple, robust indicators, longer term. You know how much you're going to bet on each trade. You have limited capital. You can't bet the farm on each trade. It doesn't work. And you have to know when to exit. You have to know when to exit with a loss, and you have to know when to exit with a profit. And that's the game. One of the things I did in Vancouver was I put up a chart of the monthly performance of Tom Shanks. Tom Shanks, one of the original turtles, his firm Hawksbill Capital. And I didn't put his name on it. I just used the numbers from his performance to show people. I'm no agent for Tom or anything, but his performance is really interesting because you can look at it. You can see there's up months, there's down months, and overall there's fantastic annual performance. Yes, it's not a huge fund or anything, but that's not the point. The point is it's one of these baseline indicators that I use to get people to understand about the longevity of trend following, how it's worked in the long term. I also talked about Eugene Fama, the guy from Chicago, University of Chicago, the great professor, father of modern finance. He's talking about types of technical analysis. It's an ancient tale, no empirical support. So all these fantastic track records that go back decades upon decades upon decades, they're all apparently just irrelevant. They didn't really happen. They're fake. I probably somewhat belabored the point, but I think the real issue, and I mentioned this earlier in this podcast, is if you're a Bloomberg reporter and you want to get something interesting out of Cole Wilcox, talk about preventing the next crisis or the next bubble. Talk about the next bubble. Talk about when the bubble pops. Talk about a trading strategy that can actually benefit from outliers, from extreme occurrences. Beat that drum. Now, once again, I have to keep putting the disclaimer there. We know why the Bloomberg folks don't want to go that direction, just like the CNBC folks don't want to go that direction, because ultimately we have to give people their requisite supply of bullshit. So when they're 65, 75 years of age, they will have enough money to at least buy one can of cat food per week. That's the objective, right? Wait for the state to give you your cat food can. You'll get it once a week. They'll pet you on the head. You'll get your cat food can. Oh, the joy. Happy, happy, joy, joy, to quote Ren and Stimpy, right? But that's it. You're hunting for the outliers. It's not about predictions. It's not about calls. It's not about asking what's going to happen tomorrow or what you're doing right now. It's putting yourself in a position that when the next bam happens, you're there. You're there. And I told the crowd in Vancouver, I said, the bell curve is great if we want to look at everybody in this audience and we want to kind of look at age and hair color and height, and we're going to get some nice, big, broad middle classification, and we'll see everybody who's under the big bell, and we're going to know all those averages. There's going to be one guy in the audience who's 7 foot tall or 6'9" or something. There'll be one really kind of chunky guy or a guy with a funky colored hair. Those are the guys in the real world. When you start to think about markets, those are the terribly important things to be aware of. To be aware of the outliers, the edges. That's where all the fun takes place. But we've not been indoctrinated to that. Those are random jumps, The world happens in these random jumps. To the edges. To the extremes. It's never a straight line consistency. Oh, it feels like a straight line consistency right now because Father Bernanke is taking care of us all, and he's promising us low interest rates forever and high stock market forever. And it's safe to get back into the boat and believe and buy and hold, because we know now that Father Bernanke is on the game, there's never going to be a down moment. It's not going to happen. Yeah. Well, it's all nonsense. All absolute nonsense. You know, the one thing I did show the crowd in Vancouver too, that fantastic commercial from the Masters talking about Bobby Jones. I think it was an IBM commercial and about process versus outcome. And I'm going to go ahead and play that again real quick.
To Bobby Jones, golf wasn't just a game. It was a science. A subject worthy of study. By focusing less on his score and more on the mechanics of his swing, he performed better than anyone in his day. It just goes to show you, looking at data is one thing. Knowing what to do with it, well, that's a whole different game.
That's just a fantastic piece of audio, isn't it? Worry about the process. Even though it might be boring, swing the club. Swing it the same way every time. That's the name of the game. So, you know, I kind of started this with Cole, and I kind of bring it back to his interview with Bloomberg. And you get somebody on there, and Cole's a really interesting guy. You know, he always, like a lot of the guys I've talked to, I've learned a lot from a lot of different people. I've learned a lot from Cole. And I learned, even listening to that full interview, I learned a different way to kind of describe trend following. But you, as a listener out there, you have to be aware of whenever you hear an interview or see a piece of information. Look to the agenda. Look to the agenda. Think about being in a trend following mindset. Think about the questions that a major news operation is asking. Don't just think about the answers. Think about the questions. Questions are always the setup. The questions are always the manipulation. That's where it has to start. So look, I hope you follow along in a quick podcast like this to see every day you can wake up and you can see the machine. You can see the system working against you. And you have to realize it's you. It's you on an island fighting against the machine, trying to make your way, trying to find profit. That's what you're trying to do. All the other stuff is nonsense. You know, that guy, I still love the way that guy said it. Tell us about, come on, let's see if I can even imitate it. Can you tell us about energies? Can you tell us about energies? Yeah. Energies are, it's a price, and it's right here, right now, and that's what I can tell you. Oh, well, thank you. I'm sorry if I'm being too mocking today. Anyways, I'm back in the saddle with some more interviews next week, and I will keep the podcasts coming. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.